Good evening, students. Welcome to the session. Have you revised for TDS? Can somebody quickly revise it for me?
uh, 194K income in respects of units, mutual funds, any person to a resident at the time of credit or payment, whichever is earlier at the rate of 10%, threshold is 10,000. It is not applicable on the capital gains. Then 194 LA, TDS on compensation in respect of compulsory acquisition of land other than rural agriculture land because it is not a capital asset, and urban agricultural land because it is exempt under section 1037. Payer any person to a resident at the time of payment, TDS at the rate of 10%, threshold limit is 5 lakhs. Then 194N on cash withdrawals, bank, cooperative bank, post office, and if the threshold, if there is a cash withdrawal by any person is greater than 1 CR, then TDS will be at the rate of 2% on the excess amount of withdrawal of 1 CR. If the recipient has not furnished ITR for all the three preceding previous year, then TDS and the time limit has exceeded under section 139(1). Then other than cooperative society, if withdrawal is greater than 20 lakhs and less than 1 CR, then TDS will be 2%, and greater than 1 CR, then TDS will be 5%. And for the cooperative society, 1 CR is replaced by 3 CR at every place. Then section 194P, deduction of tax in respect of specified senior citizens by the bank. Bank has to deduct the tax at rate in force after considering the chapter 6A deductions and rebate under section 87. Uh, by specified senior citizens are here is a resident senior citizen having age greater than 75 years of age, and he is having income of only pension income and interest income in the same bank. Then he don't have to require to file ITR by the senior citizen, and he don't have to submit as per section 139(1). Then section 194 194O, payment by payment by e-commerce operator to the e-commerce participant uh, uh, at the rate of at the time of credit or payment at the rate of 0.1% on the gross amount of sale of goods of service. Sale of goods of service. The threshold limit is for individual or HUF, it is 5 lakhs. For others, there is no threshold limit. Here, the e-commerce operator can be either resident or non-resident, and e-commerce participant is the resident. Here, no other TDS section will be applicable if TDS is on the transaction is deducted under section 194O, or even if it is exempted because of the threshold for individuals or HUF under 5 lakh rupees. Moreover, for stock exchanges, recognized stock exchanges, 194O is not applicable. For payment gateways, if the payment gateway is not liable to deduct under 194O, if the e-commerce operator, whoever is paying to the e-commerce participant, take the declarations and he deduct the tax. And for the insurance aggregator, for the first payment, he is liable for the deduction of TDS under section 194O. For the subsequent year, if there is a direct transaction between the insurer company and the insurer person, then he is not liable to deduct TDS under section 194O, insurer aggregator. Then for the e-auctions, 194 is not applicable if he is only for discovery of the price only. He is not making any platform for purchase, facilitating any platform for purchasing or selling of the goods, and he is just only for the uh, discovery of the price and starting point, and he doesn't have any about what the price is going to pay and when it is going to pay. Then e-auctioner is not required to deduct TDS under section 194O. And if there are multiple e-commerce operator, then the final e-commerce operator, seller e-commerce operator who is paying to the e-commerce participant, he has to deduct tax under section 194O. And in gross receipts, all the prices like logistic transportation charges and whatever the charges that is deducted, it has to be added into the gross receipts. And if the purchaser of the goods or services directly pays to the seller, then it also upon which the e-commerce operator has calculated for the goods or services, then it has to be added into the gross amount of the TDS. And uh, then on GST component, if it is shown separately, then it is not required to deduct one TDS. And if it is on payment basis, payment is before the credit, then we have to deduct TDS on GST component also. On purchase returns, if the purchase return, if there is a purchase returns, then the TDS deducted can be adjusted on the other transactions with the same person. And if it is again replaced by the buyer, then there is no adjustments are required. And for the discounts given by if the discounts are given by the seller itself, then TDS is not required to deduct on the discount amount. But if the discount is given by the e-commerce operator, then TDS will be on the gross amount that is paid to the e-commerce participant. Then 194Q, TDS on purchase of goods. Uh, the buyer here the buyer who purchases, if amount is greater than rupees 50 lakhs, he has to deduct the tax at the rate of 0.1% of the sum exceeding rupees 50 lakhs at the time of credit or payment, whichever is earlier. If TDS has been deducted on transaction under any section, then TDS will not be applicable under section 194Q. The buyer turnover should be greater than 10 crores in the preceding financial year. Here the turnover gross receipts or total sales is with should be from the business, and if it is from the non-business activity, we should not add it. And if the buyer is a non-resident, and if he does not have any permanent establishment in India, then he does not require to deduct TDS under section 194Q. And if the resident seller is only having income, exempted income, then also TDS under section 194Q is not required to deduct it. And on for the advance payments also, we have to deduct TDS. And stock exchanges, TDS is not applicable. On GST, same as 194O. And for if the central government is the buyer, then the central government has to deduct the TDS as per 194P. And if the central government is seller, then TDS is not required to be deducted. Then 194R, business receipts में देखे थे, TDS at 10% is greater than 20,000 rupees. Then 194S, virtual digital assets 1%. 194T, partnerships to partner firms 10% at the rate if greater than 20,000. And 194 LBC, securitization trust, income exempt under 1023 DA, TDS at the rate of 10%. And for non-resident, it is a rate in force. And for alternate investment funds, it is other income other than 1023 FBB, PGBP income, which is taxable in the hands of the unit holders. TDS should be deducted at the rate of 10% for resident, and for non-resident, rates in force. And for if REITs, if the REIT is holding directly the immovable property and is giving the rental income, then TDS is under section 194 LBA, rate of 10%, and for non-resident, rates in force. And if it is from a special purpose vehicle, if it is exempt under section 1024 FCA, interest income or dividend income. For interest income, TDS is rate of 10% and 5% for dividend income, and SPV has opted to pay tax under concessional rate 115 BAA. Then TDS will be under 10% and rating. Dividend income 10%. Then we have seen non-applicability of TDS. There is a circular by the CBDT that TDS is not applicable if the income from the corporation which has exempted under section 1026 BBB, welfare for the society of welfare for the upliftment of ex-servicemen, then we don't have to require to deduct TDS. Section 196, interest or dividend or any sum payable to the government or Reserve Bank of India or certain corporations like Central Act, established under the Central Act or mutual funds. then we don't have to require to deduct TDS. Then section 197, if the SSC make an application to the assessing officer that to deduct the TDS at the lower rate or no TDS to be required. If assessing officer is satisfied, then he will give the certificate, and if the certificate is submitted to the deductor, then deductor has to deduct the TDS at lower rates and no TDS has to be deducted. Then 197A, if a person other than a company or a firm furnishes to the person that he has having income less than basic consumption limit in the form, then he don't have to deduct the TDS. And if a senior citizen having age greater than 60 years, resident senior citizen having age greater than 60 years, and he fills the form 15H to the person deductor, then he don't have to, if his total income is not liable to tax, is less than tax on the total income is zero nil, then you don't have to deduct the tax. Then section 198, TDS income is the deemed to be the income of the SSC, and except under two sections. One is the cash withdrawal 194N, and other is a tax on the business perquisite, a tax paid by the employer on the business non-monetary business perquisite on behalf of the employee under section 192 1A. Yes, ma'am.
Yes. Thank you so much. It was very good. Like comprehensively done. So basically now we are done with the TDS provision. Yes. So now we are going to start with the TDS for the non-resident. So TDS for the non-residents which is there is subject to under a very different section. See what all sections that you have done now, there the payer was whom? A resident, except which section, students? Yes, which was the section which was also applicable?
Salary 192.
Very good. Very good. So salary 192, if you recollect, student, is applicable to both resident and non-resident. Right? Because there the payer was any person. Payer was any person. Other than all of that, other than that section, all of the other sections which were there. If I show you here, let us go back. All the sections, if you see, here we are getting for salary R plus NR. Other than that, it was always a resident pay. Are we clear about it? So in that particular case, we have the separate section for this, which is section 195. So 195, which has been there, is a separate provision for the non-resident. So other than salary and other than certain interest incomes, every other payment to a non-resident which is chargeable to tax, an income which is not chargeable to tax itself is not subject to TDS. Yes or no? An income which is chargeable to tax only will be subject to TDS. So other than that, it will be covered under 195. Are we clear? So let me open up the module also simultaneously for you. See, we have here section 195, any other sum payable to a non-resident. Now this we are just discussing at this point, but we are going to deal with this in which chapter? NR taxation chapter. And these are some of the other sections which are also applicable in respect of the non-resident. 194E, that is income in respect of the non-resident sportsman, sports association, entertainer. Again, this is for the non-resident, a specific income when it is paid to a sports person covered under the NR tax chapter. Interest payable by an infrastructure debt fund to non-resident or a foreign company, again covered in that chapter. This we did distribution of interest by the business trust to the unit holder. If the unit holder is a non-resident, that we have already covered in the REIT chapter. So we are not again doing it here. Again, distribution of the rental income to a non-resident unit holder. This is also what we have already done. Distribution by AIF to a non-resident unit holder. Again, we have done that. Distribution by a securitization trust to a non-resident unit holder. We have done that. Then interest paid to a non-resident under 194 LC. This again, we will deal that in the NR tax class. And payment in respect of the units of the mutual fund. Income in respect of the units of the mutual fund to a non-resident, again we'll see that in that particular class. Then income by way of interest or dividend on ADR, GDR. Income of the foreign institutional investors. All of these are separate sections which we are going to deal with in those particular classes. Fine? Yes or no? Okay. So here we are restricting only to the resident transaction. Fine. Now again moving forward to the procedural sections of the TDS. We have done certain procedural provisions. Yes or no? We have done, like for example, that the TDS which is deducted is going to be considered as your income received. Then you will get the credit for your TDS. Now tell me practically, where do you see the credit for the TDS? How do you see the credit that you have got the credit? How do you see that practically?
Form 26AS.
Form 26AS. What is Form 26AS?
In which it is every जिसने भी काटा है टीडीएस वो पूरा का पूरा वहाँ पे आता है कि किसने कितना अमाउंट पर कितना कौन से सेक्शन के नीचे पूरे साल में टीडीएस काटा है क्या आता है.
It is nothing but the statement of your tax deducted and collected. Right? Then what is your AIS, TIS? What is that? What is AIS, TIS?
इंफॉर्मेशन सिस्टम में आपका पूरा ट्रांजेक्शन्स मतलब पैन और आधार कार्ड से कनेक्टेड होके एसएफटी ट्रांजेक्शन्स सब कुछ वहाँ पे लोड हो जाता है मैम एआईएस में एंड कंसोलिडेटेड फॉर्म में टीआईएस में आता है. सेम थिंग इन कंसोलिडेटेड फॉर्म इज टीआईएस.
AIS is nothing but your annual information summary, right? And TIS is taxpayer information. ज्यादा कुछ डिफरेंस नहीं है. सिर्फ TIS में आपको सब एक साथ कंसोलिडेटेड दिखता है. AIS में you have individual breakup. Like what all transactions have been done under your PAN or Aadhaar, which includes your tax deducted at source, tax collected at source, your payments that you have made outside India under like your PAN. So all of that is there under, or if you have purchased any immobile property, the credit card transactions done, which have been, submitted by the bank, cash withdrawals. So all of those transactions are reflected in your AIS, which is basically nothing but the summary of what the payers have reported under the statement of financial transaction, under the SFT filing. The TDS credit appears under the 26AS. Are we clear? So the payer, when he deducts the TDS, he has certain duties. What are his duties?
He has to deposit it back to the government with the due date, and he has to also file the return for the TDS every quarterly, and he also has to give the certificate to the payee that he has deducted and paid to the government.
Yes, absolutely. Very good. So section 200 talks about the duty of the person deducting the tax. So first, the person has to deduct the TDS. Who is responsible for it? Now, who are the persons responsible for deducting the TDS? So here, a table has been given in your module. Let me show you that. Yes. In case of salary, other than the central and state government salary, the employer himself or its principal officer if it's a company. In case of interest on securities, the local authority, the company, the corporation, and the principal officer. If the sum is payable to a non-resident Indian, right? Then in case of the sum is representing consideration for the transfer of any foreign exchange asset, then any authorized person who is responsible for remitting the sum or for getting the amount credited to his NRE account. Then furnishing of information relating to a payment to a non-resident or to a foreign company, any payer. Any other sum, the payer who is there. So these are the person who is responsible for deducting the tax. Now, what are the responsibilities? One is to deduct. Second is to deposit the tax into the government's account. So the payer is basically acting as an agent for the government. Right? The payer acts as an agent for the government. What are the due dates by when they have to deposit? So in case the deduction is under these sections, right? And the deduction is by the office of the government, then within 7 days from the month of the deduction. In case of other deductors, if the income is credited or paid, right, in the month of March, other than these cases, we are going to look at these cases, which is basically 2, 3, 4, 5, and 6. For the month of March, by 30th April. For any other month, 7th of the next month. For the section 192, 194, dividend, 194D, insurance commission, 194H, you have to make the quarterly payment. Right? And in case of the other deductors, 194IA, what is 194IA?
Rent.
Rent. No, not rent. 194IA is not rent. What is
Sale of
194IA?
property by
Sale of
an
property.
individual above 50
Yes.
lakh rupees.
Correct. It's
1%
a sale of
is to be
property. Correct. So sale of property, when you deduct the TDS, you have to deposit within 30 days from the end of the month of deduction. 194 IB, what is that section?
rent.
Rent by individual or HUF.
Correct. Rent by individual or HUF who's not covered under 194I. Who's not covered under 194I. Which was the scenario which is not covered under 194I? What is the rent limit there under 194 IB?
Income from business less than 1 crore in the previous year, or for the professional less than 50 lakhs.
No, but what is the rent limit?
50,000.
50,000. So 194 IB again, you have to deposit within 30 days from the end of the month of deduction. When do you have to deduct under 194 IB? When is the TDS required to be deducted under 194 IB?
Last in the last month or last month of the tenancy.
Yes, very good. Last month of the year or last month of the tenancy. And accordingly, within 30 days from that, you have to deposit. 194M. What is 194M?
By an individual for the contracts. It's like the contract, commission, and the professional services, like C,
Yes.
194C, H, and J.
Yes, very good. Where the payment is more than What is the
50
threshold
lakhs.
for
50 lakhs.
So any payer which is not covered under 194C, J and H, they have to deposit the TDS within 30 days from the end of the month of deduction. 194S in case of a specified person. Who is a specified person under 194S?
Virtual digital.
Yeah, but who is a specified person there? Yes.
I think it's the platform through which the virtual, okay.
No. One 194S, who is a specified person? Correct. Individual or HUF?
50,000 तक
No.
अगर सीख है नहीं
No.
Individual or HUF whose gross receipts are turnover are less than 1 CR for business and 50 lakhs for
Correct. Very good.
vision.
So individual or HUF whose turnover is less than 1 crore or 50 lakh in the case of profession, that is a specified person. For them, the date of deposit is 30 days from the end of the month of deduction. Other than the specified person, it will be 7 days from the end of the month. And for the month of March, it is 30th April. For 192, 194, 194D and 194H, it is quarterly payment. 7th of every next quarter. Fine. So these dates you will have to remember. Just remember this for 194I, IB, M and S in case of specified person, the dates are 30 days. For every person other than that, it is 7th of the next month or 30th April in the case of March. Yes?
Yes, ma'am.
If there is no deduction in any quarter,
Sorry?
if there is no deduction in any quarter, is TDS
You don't have
return?
to deposit. If there's no deduction, you don't have to deposit.
No, not deposit. TDS return, is TDS return still to be filed?
No, nil return is not required.
Okay.
Okay. Now, the third obligation of the payer is to furnish the statement of TDS, which generally you call it as TDS return, but it is called as statement of TDS. Okay. So, the statement of TDS are furnished in different forms. For example, form 24Q, 27Q, 26Q and 26QF. So 24Q form which has been there is used if the deduction of tax is under section 192, which is, yes, which is
Salaries.
Salary.
And 194P. What is 194P?
specified
Specified
pension
Sorry?
By a
pension
bank,
Pension.
by the specified persons.
Correct. So if the pensioner is maintaining the account in the bank where is only receiving the interest income, then the bank has to deduct. So banks have to report the TDS deducted under 194 under 24Q form. Then 27Q which is there is applicable if the deduction of tax is under 193 to section 196D, all the other sections, other than 194P. Okay? And other than the deductees which are non-resident. Then 26Q. 26Q is 193 to 196D. Again, other than 194P in respect of all other deductees. 26QF is in respect of the exchanges when they have to report the tax deduction under 194S. So 24Q, 27Q, 26Q and 26QF. These are the 4 forms which are usually used. The due dates for all of this remains the same. It has to be submitted quarterly for every quarter by the end of the month, next month, except in the case of 31st March quarter where it has to be submitted by 31st May. Yes? So, this is what you have to submit. Now, in case there was a question asked, if there is no deduction, do we have to submit for that quarter? The answer is no. And remember these statements, 24Q, 27Q, 26Q, 26QF, if they are not submitted on time, what are the consequences? Let us have a look at it. Where have they mentioned? I think, let me just check. Yeah. So there is this section called, okay, let me just show you the section itself. So, fee for default in furnishing the statements. Where a person fails to deliver a statement within the time prescribed under section 200, subsection 3. 200 is what? Duties of the payer or the duties of the person who is required to deduct the TDS. He shall be liable to pay by way of fee a sum of 200 rupees for every day during which the failure continues. So in case you fail to submit this particular statement, which is the TDS return, you will be required to pay the fees, which is the late filing fee or late submission fee, which is equal to 200 rupees per day. And what they are saying that in case you are just collecting the fee 200 for per day, but it cannot exceed the amount of the TDS. And this has to be paid before submitting the TDS return. Otherwise, they will not allow you to submit the TDS return. So these days, the TDS returns can be submitted online. Gone are those days when you used to submit it offline. Now the TDS returns can be submitted easily online. So they will not allow you to submit the return unless you pay the fees of 200 rupees per day. So in case, there is a possibility that you have not deducted the TDS and therefore for that quarter you did not file the return. But later you realize you should have deducted the TDS, but you have not filed the return. So what will happen if you have even not filed the nil return? You will be then required to submit a late fee of 200 per day till the date you submit your return. Are you getting this point? Fine. Plus, there are also certain penalties which are imposed in case you fail to submit your TDS returns. So it is not that only the late fee is applicable in this case. There will also be the penalties in respect of the non-submission of your TDS return. So if you're not submitting your TDS return and this is intentional, like if there's a genuine cause, obviously they would not levy the penalty. But in case this is intentional, so in that cases, they will impose the penalties also. Are you getting this particular point? So what is the penalty for failure to furnish the statements? So in case that you fail to furnish the statements, there is penalty provided under section 271H. What is the penalty? Let us have a look at it. Without prejudice to the provision of the Act, the assessing officer may direct a person to pay the penalty if he fails to deliver or cause to deliver a statement within the time prescribed under section 203, or furnishes the incorrect information in the statement which is required to be delivered or caused to be delivered. And the penalty shall be a sum which will be between either 10,000 to rupees 1 lakh. However, no penalty shall be levied for the failure to deliver the statement if the person proves that after paying the TDS along with the fees and the interest to the credit of the central government, he has delivered the statements before the expiry of 1 month from the time prescribed for delivering such statement. So what they are saying is that, the penalty will not be levied if you fail to deliver the statement if the payer proves that he has paid the TDS deducted, he has paid the fees, he has paid the interest also on the TDS to the credit of the central government, and he has also furnished the statement before the expiry of 1 month from the time to be required to deliver the statement. So within if he has delivered the statement within 1 month of the time period which is mentioned. What is the time period which is mentioned over here? Let's say it was for 31st March. The due date was 31st May. And I have submitted my TDS return by, let's say, 30th of June. Then the penalty in that case will not be levied. Are we clear?
Yes, ma'am.
So again, see, you don't have to read the penalties in isolation. If you read the penalties in isolation, you will not be able to recollect what you have read. So you have to read it like this. Are we clear? And in case there is a genuine cause, there is a bona fide reason which has been given, then in that case, the penalty may not be imposed. So if a reasonable cause has been furnished by the assessee, then in that particular case, the penalty may not be levied. But he has to satisfy the AO that why there was a failure on his part. Are we clear? Yes, any questions, any doubt? Okay. Let us then proceed further. See. So 24Q for salaries and 194P, 26Q for all other deductees from section 193 to 196D, 27Q for non-resident deductees, and 27QF for the exchanges under 194S. And in case of 194IA, where you have to deposit the TDS within 30 days from the month of deduction, you have to furnish the challan cum statement. Now, what is this challan cum statement? In form 26QB. So, these particular sections which are there, if you look at it, these 194IA, IB, M, these are targeting which kind of taxpayers?
Individuals whose turnover is less than
So
50 lakhs.
basically individuals जो business भी नहीं कर रहे ज़्यादा. They may be, doing it for their personal purposes. Like for example, if we talk about this 194I, this is for the sale of immovable property. Now this immovable property can be for my residential property also. So these are basically small taxpayers, isn't it? 194 IB. This is a rent paid by an individual who is not doing any business, or his turnover is less than 1 crore. Alright. 194M. Again, these are the individuals who may not be, doing any business. So for them, like putting a requirement to pay the TDS month on month, just like for other deductors, putting a requirement to file the TDS returns every quarter on quarter puts a hardship. So therefore, they have simplified it. For these kind of taxpayers, they have said, you deposit the TDS, what you have deducted, and that challan which is that you are paying to deposit the TDS to the government will be considered as a return on. So in the challan itself, see normal TDS challan when you pay, you just write the section number that you have deducted the TDS under 192, 194J, 194C. But for these kind of challan, for 194 IAIBM, you have to also mention in the challan itself the details of the pay, the PAN of the pay. Right? So this is a challan cum return. You don't need to file a separate return. For these kind of cases, 192 to 196D, you have to you have to deposit the TDS and also file a statement. But for these cases, you don't need to file any statement. This challan will be considered as a statement itself. So for 194 IA under 26 QB, for 194 IB under 26 QC, for 194M under 26 QD, and 194S in case of a specified person 26 QE, and the time limit will be what? Same as the date of payment. Because when you pay through challan, and the challan itself is returned, so the time limit remains the same, which is 30 days from the end of the month of deduction. So you have to furnish a challan cum statement. Are we clear?
Yes, ma'am.
In case of the government office who is deducting the TDS, they have to submit the statement in form 24G. For the March month, by 30th April, where the statement relates to other months, before 15th of the relevant month. This is for the government. Now, the fourth responsibility of the person who is required to deduct TDS, the deductor, is to furnish the certificate of TDS. What is the certificate of TDS? So the payee gets the certificate from the deductor that we have deducted the TDS, this is your income, and this is the deduction that we have done for TDS, this is the section under which we have deducted, this is the tax rate which is there. So if the deduction is under 192 salary 194P, it has to be issued in form 16. What you have learned so far, when you file the return, you call for form 16, which will have all the details of your salary, the TDS deduction. Yes or no? It has part A, part B. And this has to be issued by 15th June of the immediately following financial year. And in case of other sections, it has to be under form 16A. Within 15 days from the due date of furnishing the TDS statement. So if you have furnished by 31st July, within 15 days from that, by 15th August. And in case of this section, 194 IA, IB, M, and S, in case of specified person, it has to be in form 16B, C, D, E. So these are the compliances that the payer is required to undertake under section 200. Are we clear? Any questions, any doubt? Fine. Now, one more important point is that the TDS statement that you furnish, let's say for example, if you have deducted at incorrect rate, you have put the wrong amount on which the deduction has been made. Can we revise this TDS statement? Yes. So you can file a correction statement to rectify any mistake, to add any payer, to delete any payer, or to update the information. So earlier there was no time limit for correction statements to be filed. So earlier you can file the correction statement as many times as you want. But what happens with that is, see, the payee would have already filed his income tax return. And the time limit for income tax return would have also expired. Now, when you rectify it, if there is no time limit, there is no possibility for me to go back. And the assessment time limits would have also expired. So now they have given a time limit with effect from 1/4/2025 that a deductor can submit the correction statement only up to 6 years from the end of the financial year in which the original return is filed. So the correction statement can be filed only within the period of 6 years. Fine. Okay. Now, consequences of failure to deduct or pay. Let's say, for example, if you have not deducted the TDS, or if you have deducted the TDS, you have not paid it to the government. We have already discussed this in the PGBP class also. What are the consequences?
40AI for non-resident, 100% disallowed, and for resident, 40AIA, 30% disallowed. And if it
What
is
are the
salary
other?
for
Yeah,
salary for non-resident, 100% disallowed.
under
Uh,
48.
if 48.
Yes. What are the other consequences? So the person who is required to deduct and has not deducted, or he has deducted but not paid, he would be deemed to be an assessee in default. And he would be liable to pay the interest, which is 1% for every month or part of the month on the tax which is not deducted from the date when it was deductible to the date on which it was actually deducted, and 1.5% for every month or part of the month for non-payment. So from the date on which tax was deducted to the date on which it was actually paid. Are we clear? So, and plus there will be a disallowance. However, a person will not be treated as an assessee in default if, when we will not be treated as, what are the exceptions to this?
When the payee himself pays the tax.
Yes. When the payee has paid the tax, offered the income in his income tax return, and furnishes a CA certificate to the payer, then the payer will not be treated as an assessee in default, which means the disallowance of expenditure will not be made. However, interest will still be collected. So, up till what point you will have to end up paying the interest?
Until the point he files the return.
Correct. So, if you look at section 201, consequences of failure to deduct or pay. So, in this case, if the payee has deposited the sum, the interest shall be payable from the date on which tax was deductible to the date of furnishing the return of income by the payee. But which interest? 1% or 1.5%? Yes. Which interest will you charge? 1%. So what does it say? In the case of a person, if he fails to deduct the tax on the sum paid to payee or on the sum credited to the payee, but is not deemed to be an assessee in default under the first proviso to subsection 1, the interest under clause 1, what is the interest under clause 1? 1%. Shall be payable from the date on which tax was deductible to the date of furnishing the return of income by the payee. Do you recollect this? We have also done this in the PGBP class. Yes or no, students?
Yes, ma'am.
So 1% is still applicable from the date of TDS deductible till the date of furnishing the return of income by the pay. Fine. Now, there will also be penalties in case you fail to deduct the TDS. What are the penalties? So let us look at it. So, penalty for failure to deduct the tax at source. Now, earlier this was there under 271C. Right? This is there under 271C. What does it say? If any person fails to deduct the whole or part of tax as required under the chapter of TDS, or pay the whole or any part of tax as required under the proviso to 194B, first proviso to 194R, 194S, or 194BA. Right? Then such person shall be liable to pay by way of penalty a sum equal to the tax which person failed to deduct or pay. So what is this 194B? What are these sections talking about? Why they are referring only to proviso to 194B, first proviso to 194R, proviso to 194S1, 194BA2? What are these sections? Can somebody make a link? Even if you don't know, you can still make a link.
Winnings.
Winnings, but yeah, 194B is fine, but RS.
Non-perquisites मतलब in kind.
Yes, very good, very good, very good. Yes. So these are referring to the payments in kind, because यहाँ पर तो लिखा है ना, deduct the whole or any part of tax as required under the provisions of chapter this thing, or pay or ensure the payment of whole or any part of tax as required by under these. So this is the payments in kind. Okay. So if in these sections you have not made the payment, they are not talking about all the sections for the payment. They are only talking about for the payment here, where the payments are basically in kind. Then the penalty shall be imposed by the assessing officer, which will be a sum equal to the amount of tax which the person failed to deduct or pay. Again, it is not necessary that in every case the penalty would be levied. So penalty may be not levied in the genuine cause. If a reasonable cause is shown that, okay, this was the reason why we did not pay the penalty, then in those cases the penalty may not be levied. Are we clear? Yes, any questions, any doubt?
मैम 234E में वो स्टेटमेंट नहीं भरे तो है एंड
Correct.
271C का है जिसको TDS डिडक्ट नहीं करे और TDS पेमेंट नहीं किए, राइट मैम?
See, 234E is a late filing fee जब आपने रिटर्न फर्निश नहीं किया.
यस मैम.
करेक्ट. बट अगर आपने रिटर्न फर्निश नहीं किया तो फीस के साथ साथ, फीस तो मैंडेटरी है, बट अगर आपका रीजनेबल कॉज नहीं है, लेट्स से फॉर एग्जांपल आपका बहुत बड़ा अमाउंट है, आपने उनके रिटर्न्स फाइल ही नहीं की है, तो उस केस में एओ कैन इनिशिएट द पेनल्टी ऑल्सो. So penalty which is there is basically initiated in the cases where there is seen that you are not complying with the law and there is a like evasion which has been happening. So उनके केस में penalty लग सकता है. It is not that penalty is discretionary. It is discretionary on the part of you. It is not mandatory. Fee is mandatory. Fine?
Okay, ma'am. Yes, ma'am.
Okay, let us proceed further. So this interest, for example, is mandatory. Interest will be levied. If you don't pay the interest before furnishing the statement, they will send you the notice. They will send you a notice, or they will, issue an order for the default under 2011, whereby you will be required to pay the interest. Are we clear?
Yes, ma'am.
But the penalty which is there is discretionary. It can only be, initiated on the discretion of the AO. Okay. Any other question? Any questions? Any doubt? Okay. Now there is a CBDT circular which talks about the guidelines for waiver. Okay. One more thing before we, close. So it says that no penalty shall be charged under 222(1) from such person unless the AO is satisfied that the person without good and sufficient reasons has failed to deduct and pay such tax. So as I said, only in genuine cases you can come out. Like if it's a genuine case, they may not levy the penalty. So if you look at this section, what it says is that 2011, if you have if there's a genuine cause, good and sufficient reasons are there, then the AO may not levy the penalty. So what is 221? 222(1) says when an assessee is in default in making a payment of tax, he shall, in addition to the amount of arrears and the amount of interest which is payable, be liable by way of penalty to pay such amount as the AO may direct, and in the case of a continuing default, further amounts as the AO may from time to time direct. However, the total penalty does not exceed the amount of tax in arrears. So if there is an interest payable, the tax is payable, then in that case, if you have not paid, then the AO can also initiate the penalty under 220. So what are the three penalties in terms of TDS that we have seen so far? We have seen in case of failure to deduct the tax, failure to pay the tax and the interest, failure to furnish the statements. For all these three, there is a penalty. Okay? Fine? Yes or no? So for example, here also you see that where the assessee proves that the default was for good and sufficient reasons, no penalty shall be levied under this section. And the penalty shall not be cancelled just because the assessee has paid the tax before the levy of penalty. Are we clear? Yes, any question, any doubt? Fine?
Clear, ma'am.
Okay. Now this here is the guideline for waiver of interest charge under 2011A. There's a circular which is given. So the CBDT has directed the Director General of Income Tax or the Chief Commissioner of Income Tax that they may reduce or waive the interest under 2011A. 201A1. What is 201? 1A subsection 1, which is this 1% for the non-deduction of tax. Okay. So in the classes of cases specified below for the period and to the extent they may deem fit. However, no reduction or waiver shall be ordered unless the principal demand is fully paid. See, this is the waiver of interest, which is for 1%. This is not the waiver of the tax demand itself. So if the tax demand has been fully paid, they may consider waiving of the interest. It's not something that they have to. That's a discretion again given to them. They can consider. There is no limit as like they can, waive 100%, they can waive only 20%, they can waive 50%. So that what they may deem fit. So which are the cases where during the course of proceedings for search and seizure, the books of accounts necessary for making the deduction was seized. And because of that, the assessee was not able to deduct the tax. Because in the search and seizure, your books of accounts are seized by the officer. So in that case, you may not be able to deduct the TDS because you don't have access to the books of accounts. Or where the sum was not liable for deduction on the basis of an order passed by the jurisdictional high court. And as a result, the payer did not deduct the tax. And subsequently, the Supreme Court reversed the decision of the High Court, or a larger bench of the High Court reversed the decision of the division bench. And because of which now the tax is deductible. Or the payer had deducted the tax at a lesser rate as compared to what the High Court or Supreme Court has now held. So again, there is no fault on the part of payer. He was relying on a jurisdictional high court ruling, jurisdictional high court. Remember, it can't be any other high court. And he relied on that, and then that decision got reversed by Supreme Court or a larger bench of high court. And because of which now, he has to deduct the tax. So in these cases, the interest can be waived. Or where the default under 201 relates to non-deduction or a lower deduction of tax under 195 in respect of payment made to a non-resident being a resident of country with which India has a DTAA. Under section 90 or 90A is basically the DTAA. And where a dispute regarding the tax payable in India in respect of the said payment has been referred in the mutual agreement procedure. So basically, you know what happens is, in case of the international tax disputes, the disputes can be referred to the authorities of both the countries. Where the dispute relates to a treaty interpretation or application of the tax treaty, you may not go through the normal route of dispute procedure. You can directly reach out to the competent authority. Competent authority is a designated authority in the government to whom you can reach out to resolve the dispute mutually with the tax authority of the other country, so that the same tax treatment is granted in both the country. And therefore, you have not deducted the TDS under 195 because the dispute has been referred under the mutual agreement procedure. Then you have submitted that dispute within a period of 2 years from the date on which the notice of demand was received by the assessee in default. And the dispute has also been settled under the mutual agreement procedure. And you have also given your acceptance to the resolution. So, because of that, now you are required to deduct TDS. So, in these cases, the interest can be waived. And even if the interest has already been paid by the deductor, the same can also be considered for a waiver. So it is not that, only when the interest is outstanding, they can apply for the waiver. Even if they have paid the interest under dispute, they can still apply for the waiver. They can make an application to either the Chief Commissioner or Director General of Income Tax. And upon looking the facts and the circumstances of the case, the Chief Commissioner or the Director General can pass an order after providing the adequate opportunity to the applicant to waive the interest. However, there will not be any appeal passed, there will not be any appeal permitted against this particular waiver order. If they do not waive, you can't appeal before the CIT or any other forum. Are we clear? So what are the cases for waiver? When you have not paid the TDS because your books of accounts were seized, when you have gone for the mutual agreement procedure, or when you have relied on a jurisdictional high court ruling which has now been reversed by the Supreme Court or the larger bench of high court. Are we clear? Yes, any questions, any doubt? Okay.
Okay, ma'am.
Yes, student. Yeah.
Yes, ma'am.
Now, what is the time limit for deeming a person to be an assessee in default? So, assessee in default, मैं deduct नहीं करूंगी तो क्या मैं directly assessee in default हो जाऊंगी? नहीं. So, if you look at this section 201, so if I fail to deduct this, the AO will pass an order that I am the assessee in default. Right? So, here they say that I will be deemed to be in default. But how will I be considered that I am deemed to be in default? So, when the AO passes the order that you are the assessee in default, right? So, what is the time limit for passing that order? So, they say that this order, either in the case of a resident or non-resident, the maximum time limit is, if you look at here, it is 6 years from the end of the financial year in which the payment is made or credit is given, or 2 years from the end of the financial year in which the correction statement is delivered under the first proviso to 203. So, under 203, you can file a correction statement. We just now discussed, right? So, what is the time limit? Time limit is 6 years from the end of the financial year in which you have made the payment or you have given the credit, or 2 years from the year in which you have filed the correction statement. So, correction statement can be filed till what time? 6 years from the end of the financial year. So, if you have filed a correction statement, how can I, treat you assessee in default before that? So, then additional 2 years is given in case of correction statement filed. Are we clear? Yes? Yes or no? Fine?
ये जो 2 years है additional than 6 years, मतलब total 8 years है क्या मैम? या फिर आप
Yes. नहीं, ऐसा नहीं. 6 years in case you have not filed a correction statement. If you have filed the correction statement, then we saw that, the correction statement, if you look at this, where was that? Yeah. So for the correction statement, you get the 6 years from the end of the financial year in which your original statement was delivered. So where you have filed the correction statement, you get 2 years from the end of the correction statement, from the end of the financial year in which the correction statement is delivered. So whichever is later basically. So if there is no correction statement filed, 6 years from the end of financial year in which payment is made, or if you have filed the correction statement, it is 2 years from the end of financial year in which correction statement is delivered, whichever is later basically.
Okay, ma'am.
Okay, any other question? Okay, fine. Okay, now the non-specification of time limit where tax has been deducted but not paid. So what they are saying is that 2011 deems a person to be an assessee in default if he does not deduct tax, deducts, does not pay, or after so deducting fails to pay. So 201 contemplates 3 types of default. So if he does not pay, right, the time limit which has been specified only for passing of orders relating to this default. So if you look at this particular 201 section, which says that no order shall be passed under subsection 1, which is a person who is required to deduct TDS does not deduct and does not pay, or after so deducting fails to pay. So what they are here saying that the order for assessee in default for failure to deduct the TDS shall be passed within 6 years. They are not saying that the order made under subsection 1 shall be passed within 6 years. What they are writing the statement over here is, even though 1 is covering 3 cases, 1 is covering the case for non-deduction, non-payment, or deducting but not paying. But the order which is to be passed within 6 years for treating the assessee in default is only for the case where there is a failure to deduct. It is not talking about the failure to pay or deduct but fail to pay. So for that, there is no time limit. So the time limit of this 6 years or 2 years is only given with respect to where there is failure to deduct the tax, where there is failure to pay or failure to, after deducting there is a failure to pay, there is no time limit specified. Are we clear? Any
Yes,
question,
ma'am.
any doubt?
Clear, ma'am.
Okay. We have discussed about certificate of tax deducted. So this is the compliance that we have discussed with respect to the payer. Now, every payer other than certain cases which you have to tell me whom, there is a requirement to obtain the tax deduction and collection account number, TAN number. This is very important because all your challans can only be done through your TAN login on the income tax portal. On all your TDS certificate, there will be the TAN number which will come. On all your TDS statements, there will be TAN number which will come, without which you can't upload your TDS statement. So there is a compulsory requirement to obtain the TAN. And if you do not obtain the TAN or quote the false TAN, there will be penalty of 10,000 which will be imposed. If there is a reasonable cost, then of course the penalty will not be imposed. So which are the cases where the TAN number is not required?
IA, selling of immovable property. IB, rent for individual HUF less than 1 CR. And M, 194M, individual HUF less than 1 CR.
In those cases, the TAN number is not required. Okay. So these are the compliances which are there in respect of TDS. Then, if there is tax deductible at source and if the payer has not deducted, can the payee be asked to deduct the tax and pay it to the government? The answer is no. So if the payer was required to deduct the TDS, the demand cannot be raised directly from the assessee. The assessee shall not be called to pay the tax himself to the extent of TDS required to be deducted. Of course, he will have to pay the tax, but it is not that, you have to pay the TDS amount. Whatever tax due is there, he has to pay that tax due. Then there is this one section 2068 which says that every banking company or a cooperative society or a public company which is basically in the business of long-term finance for construction or purchase of residential houses, they have to give a statement if they are paying to a resident of the interest income less than 40,000 where the payer is a banking company or a cooperative society and 5,000 in any other case. So they have to specifically furnish a statement in respect of that. And if they do not, then there is a 500 per day penalty. But now this is very, very important section 206AA. So pay has to mandatorily furnish the PAN number to the payer. What if he doesn't furnish? So in that case, there will be a higher TDS. It will be the higher of the rate prescribed in the Income Tax Act, the rate in force. What is the meaning of rate in force? The rate in the Finance Act or the DTL or 20%. Except in the case of 194O and 194Q, where instead of 20%, they have used the higher rate of 5%. What is 194O?
E-commerce operator.
E-commerce operator, and 194Q is purchase
It
of
is
goods.
by year.
Right? So other than that, the highest rate is 20%. So let's say, for example, in case of the rental payment for plant and machinery where the payee does not furnish his PAN, the tax would be deductible at 20% instead of the 2% under 194I. Are we getting it? So in these cases, there will be a higher TDS. But where, say, let's say, for example, the TDS is already higher than 20%. For example, under 194B, 194BA, where the TDS rate is 30%. So it will be deducted at 30% itself because that is higher than 20%. And this higher rate would also be applicable even if the payee furnishes Form 15G or 15H because he has not provided the PAN. So the payee has to mandatorily furnish the PAN. Even if he furnishes the incorrect PAN, there also this section gets applicable. Because it will be deemed that he has not furnished the PAN. However, this 206AA will not apply in case of the payment of interest under 194 LC, which we'll see in the international tax class. Also, this 206AA is not applicable in case of non-residents if they furnish the name, email ID, contact number, their address in the country of residence, their tax residency certificate certifying that they are resident of so and so country, and the tax identification number of that country, and if their income is in the nature of interest, royalty, FTS, dividend or capital gain. Are we clear? Yes or no? Any questions? Any doubt?
मैम, पेयर जब जनरली रिटर्न फॉर्म करता है टीडीएस का, तो पेई का पैन नंबर के द्वारा ही तो उनको क्रेडिट मिलेगा पेई को,
करेक्ट,
राइट मैम? अगर पेई का
Correct.
पैन नंबर ही नहीं है तो उनको क्रेडिट भी तो नहीं मिलेगा, देन
नहीं
हाउ द
मिलेगा,
पेयर
नहीं मिलेगा,
पेमेंट भी कैसे करेगा टीडीएस का?
नहीं, तो TDS का पेमेंट तो सी यू हैव टू डिपॉजिट थ्रू द चालान इटसेल्फ.
ओके, स्टेटमेंट नहीं कर पाएगा, राइट मैम?
हाँ, स्टेटमेंट में तो आपको क्रेडिट ही नहीं मिलेगा ना उसका फिर.
ओके,
Fine.
यस मैम.
Last thing, there is also a prosecution in the cases where there is willful evasion of the TDS and all of that. Let us look at it. So, failure to pay to the credit of the central government. Sorry, failure to pay the tax collected at source and failure to pay to tax to this. So, in these cases, you have the prosecution being initiated. So, in case, you fail to pay the TDS, right? Or you fail to pay the TCS. We'll see TCS later. In these cases, the prosecution can be launched. What is the meaning of prosecution?
J.
So, if a person fails to pay to the credit of central government the tax deducted, if he has already deducted but not paid to the government, meaning he has just collected the tax, deducted the tax from the other person and kept it with him. He has not given it back to the government. Or he has failed to pay the tax or ensure the payment of tax in these cases of what we have seen where the payment is in kind. He shall be punished with an imprisonment for a term not less than 3 months but which may extend to 7 years and with the fine. However, this provision will not apply. The prosecution will not be done if the payment has been made at any time before filing the TDS statement. If before filing the TDS statement, if you have not paid it today, but if before filing your TDS statement you have paid it, we will not institute the prosecution. Meaning this is for the cases where you have not at all paid to the government and you have just kept it with yourself. Are we clear? So this results in the prosecution. So prosecution is, in very intense cases where there are willful defaults, where you have been doing the defaults for a longer period of time. So in those cases, there can be prosecution instituted, which is nothing but the imprisonment. Are we clear? Okay. So With this, we'll take a break, and after the break, we'll start with the TCS and the advanced tax. Okay, let's take a break of 10 minutes and then we get back. student TCS. Now, how is TDS different from TCS, students? Like, what is tax deducted at source and what is tax collected at source? What is the difference? Any idea?
TDS से जब पेमेंट करते हैं, we have to deduct that amount and we have to pay to government. Tax collected at source, we collect from them and then we pay to the government.
Correct. So, जो TDS है वो पेमेंट पर रहता है, right? It is on the payment. And whereas the TCS which is there, it is collected on receipt of some income. So usually TDS जब आप expenditure pay कर रहे हो, right? Salary, contractor fee, professional fees, right? Or when you are even buying the immobile property, you are purchasing the goods, right? Or when the e-commerce operator was making the payment to the e-commerce participant, except in the case of, withdrawal of cash. But there also you were a payer, technically, when you like a bank has to deduct. So, although that is withdrawal of cash is not an expenditure, but as a bank, you're making the payment of those funds. So there was this TDS. TCS is on the seller of the goods. When the seller will collect the tax collected at source. Right? So, section 206C requires seller of certain goods to collect the tax from the buyers. Which are those goods? Alcoholic liquor, tendu leaves, timber or any other forest produce, timber obtained by any other mode other than the forest lease, scrap, minerals, coal or lignite or iron ore. So this is the TCS rate, 1%, 5%, 2%, then again 1%. So it differs from the goods to goods. That is one. Apart from that, so TCS is also applicable on certain other things. So basically, the seller has to collect the TCS when he's debiting the amount of buyer, debiting the account of the buyer in his book, or receiving the amount, whichever is earlier. In the case of TDS, what is it? Payment or credit, whichever is earlier. So when you, have an expense, you put the credit. You create a creditor. When you receive the amount, you create as a debtor. So debit or receipt, whichever is earlier, there the seller has to collect from the buyer of these goods a sum equal to these percentages which have been prescribed. Are we clear? However, TCS is not to be collected if the buyer gives a declaration that the goods are purchased for the purpose of manufacturing or processing or for the generation of power and not for the trading purposes. Do you recollect this? We have discussed this point under which section?
194Q.
Correct. So if the TCS is not to be collected in this situation, what did the CBDT circular under 194Q provided?
But he has to deduct the TDS under section 194Q.
Correct. So if we go to 194Q back, I think that was in the circular. So this is how, again, you have to keep on cross-referencing between the things. So this was the CBDT circular where we had seen this provision. Yeah. Applicability of 194Q in cases where the exemption has been provided under 206C1A. So 194Q, when you read it, it says 194Q does not apply. 194Q does not apply where the tax is collectible under the provisions of 206C. The 194Q does not apply in case the tax is collectible under 206C. So where you are collecting the TCS under the respective section, you don't need to deduct the tax again under 194Q. However, what if the tax collection is exempted? Because the buyer is purchasing the goods and he's giving the declaration that he's purchasing for the purpose of manufacturing or production of the goods or for the purpose of generation of power, and it is not for trading. Then the 194Q applies. Because now the TCS is not collectible. So the CBDT has clarified that in these cases 194Q shall apply where the tax is exempt to be collected under 206C1A. Are we clear? So in those cases 194Q will be applicable. Okay? Yes or no, students? Is this clear?
Clear, ma'am.
Okay. So this is the meaning of the forest produce that they have given. I'm not going into that. Now, second is lease or license of a parking lot, toll plaza, mine or a quarry. Again, 206 provides that the tax shall be collected by every person who is giving on lease to transfer any right or interest in any parking lot or toll plaza or mine or a quarry to another person other than a public sector company. So basically when you lease out the parking lots, it's very common that, the parking lots are maintained by some agency. The toll plaza is maintained by some agency. So in those cases, the lessor has to collect the TCS at the rate of 2%. But mining and quarrying excludes mining and quarrying of the mineral oil, which includes the petroleum and natural gas. Okay. So basically, mining and quarrying excludes the mining and quarrying of the natural gas and the petroleum. Third is 206C1F, which says what? If there is a seller of a motor vehicle or some notified goods, we will talk about the notified goods, who is selling this motor vehicle which is of value more than 10 lakhs. He shall collect the TCS at the rate of 1% of the sale consideration. And what are the other notified goods which have the value of more than 10 lakhs? Any wristwatch, art piece such as antiques, paintings, sculpture, coin collectible, stamp, yacht, rowing boat, canoe, helicopter, sunglasses, handbag, purse, pair of shoes, sportswear and equipment such as golf kits, ski wear, home theater system, horse for horse racing in any race clubs and horse for polo. In these cases, the TCS has to be collected at the rate of 1%. Now you may be wondering, are these goods worth rupees 10 lakhs? Yes. So these notified goods, car can be easily about 10 lakhs. But these notified goods which have been introduced are specifically introduced to capture the sale of luxury item. Can you imagine a watch of worth more than 10 lakh? Shoes worth more than 10 lakh? Handbags worth more than 10 lakh. So we are talking about the goods like Louis Vuitton, Cartier, Gucci, Armani, Prada, all of those. So we're talking about the sale of those kind of goods on which the TCS will be applicable. Now there is a CBDT circular in this respect which talks about the TCS on the sale of vehicles. The first is whether TCS is on sale of motor vehicle at the retail level or also on the sale of motor vehicles by manufacturers to dealers. So is the TCS only applicable when the cars are finally sold to customer or when the cars are sold to the dealers by the manufacturer? When, let's say for example, Tata sells to Rudra Motors or let's say Aman Motors, whatever. So the CBDT has clarified that the TCS will not be applicable on sale of motor vehicles by manufacturers to the dealers or distributor, because the idea behind introducing the TCS is to capture the high value transactions. When the final customer buys, when the final customer buys, he may not file his income tax return even though he is making huge high value purchases. So that's the reason why we have introduced this TCS provision. Then the second is whether it only applies to luxury cars. The answer is no, it applies to all the cars exceeding more than 10 lakhs. Whether the TCS is applicable in case of sale to government department, embassies, consulate, UN institutions, the answer to that is no. Then whether TCS is applicable on each sale of motor vehicle or on aggregate sale. So it has to be considered on each sale and not the aggregate sale. Whether the TCS is applicable in case of an individual, the seller being an individual. So the definition of seller is applicable in the case of motor vehicle, which includes the individual. And how would the TCS apply where the part payment is in cash and part is in kind? It is applicable on any mode of payment. It is not restricted to only the where the payment is only made by banking channel. It is not applicable only in that case. It is applicable both in cash as well as in the case where it is to a bank transfer. It is not dependent on the mode of payment. Now, who is a buyer for the purposes of 206C? A person who obtains in any sale by way of auction, tender or any other mode goods of the nature which are given there, but does not include a public sector company, government, embassy, high commission, legation, commission, consulate or trade representation of a foreign state and a club. Or a buyer in the retail sale of goods. So as I said, the buyer who is a manufacturer has been excluded for the purposes of TCS. But in case the buyer is a retailer and when the car is sold to him by a manufacturer, in that case the TCS doesn't apply. Are we clear? And in case of the 206C1F for the sale of car or the high value goods, the buyer does not include the government, local authority or a public sector company which is engaged in the business of carrying passengers. The seller is the central government, state government, local authority, corporation, local authorities, company, firm, cooperative society, any individual or HUF whose total sales, gross receipts or turnover either exceed 1 crore or 50 lakh in case of profession in the preceding financial year. Fine. The other TCS is in case of remittance under LRS. What is LRS? Any idea?
फॉरेन रेमिटेंस फॉरेन में जब पैसे भेजते तो बैंक डिडक्ट करते हैं मैम टीसीएस से.
See, LRS is a liberalized remittance scheme. I'll tell you a brief background. So, this FEMA law which is there is basically to protect our foreign exchange. And this was introduced at the time when, India was grappling with the foreign exchange reserves. But at some point in time, if you had to make any payment outside India, you had to always obtain the permissions from RBI. So after, India stabilized, then they thought that, we should not ask any questions up to a certain limit of remittances made outside India. When, India was in the crunch of foreign exchange, it was examining each and every transaction. We couldn't send any money outside. So the dollar was not easy, rupee was not easily convertible. But after we stabilized, after we, reached a position of good amount of foreign exchange reserve, the RBI thought we should not examine each and every transaction. So that's why they introduced a scheme called as liberalized remittance scheme. So as the name suggests, this is a liberalized remittance scheme, where the RBI is not going to ask any questions up to the transfer of the limit of USD 2,50,000. So for any current account transactions, you can remit the funds as an individual. However, then it was seen that people were remitting huge amount of money under LRS because $2,50,000 is also a big limit. but they were not filing any income tax returns here in India. So how are they getting that money? So the income tax said that the authorized dealer is nothing but the banker or the money converter who is giving you the foreign exchange. When you are remitting the money at that point in time, they will collect the TCS. So every person being an authorized dealer, now this is not on seller. Seller only in the case of those lists as well as the sale of vehicles and the notified goods. This is in respect of the when you take the money in foreign exchange to send outside India. So every authorized dealer who receives the amount in their LRS for remittance from India to outside India, or any seller of the overseas tour program package, booking.com, make my trip. These are, let's say, if you said you're not only booking the flights through them, you're buying a package which includes a flight, hotel, local sightseeing. You're buying a package, tour program package for overseas jurisdiction. Who receives any amount from the buyer who purchases the package, they are required to collect the tax at source at the time of debit or at the time of receipt, whichever is earlier. Now, what is the rate of TCS for the purchase of an overseas tour program package? So, when you purchase the overseas tour program package, right? Let's say, for example, when you are buying the package from Make My Trip, it should be an entire package, as I said. That time, they would collect a TCS up 5% up to rupees 10 lakh or 20% above rupees 10 lakh. Are we getting this? So a seller of the overseas tour program package will collect a sum of 20% over rupees 10 lakh and 5% below rupees 10 lakh. Clear? If the remittance is made by an authorized dealer, the authorized dealer shall collect the sum which will depend on the purpose for remittance. So if the remittance is for the purposes of education and the amount which is remitted is based on the loan obtained from any financial institution. So if you have taken the loan from the financial institution for your education outside India and you are remitting out of that sum, then there will not be any TCS in that case. However, if the remittances is for the purpose of education and the education is not sponsored through any loan, or it is for the purposes of the medical treatment, then in that particular case, no TCS up to rupees 10 lakh and till up over and about 10 lakh, it shall be 5%. Are we clear?
Yes, ma'am.
And if the remittances is for other than education and medical treatment, then no TCS up to 10 lakh, over and above 10 lakh, it will be 20%. Any questions, any doubt? Is this clear? So in case of overseas tour program package, it will be 5% of the amount which is up till 10 lakh. And if the amount is more than 10 lakh, then in that particular case, it will be 20%. And if it is the seller of, it's the authorized dealer for making the remittance outside India, if it is for the purposes of the education which is funded through the loan, there will not be any TCS. If it is in respect of other than the education or medical treatment, then over and above 10 lakh, it will be 20%. And if it is for the purposes of education and medical treatment, which is education other than loan, it will be no TCS up till 10 lakh and over and above that for the 5%. Clear? Any question, any doubt?
Clear, ma'am.
Okay, all the students, is it clear?
Clear.
Okay. Now, no TCS shall be collected in respect of the if the TDS has already been deducted under any provision, or if the buyer is a central government, state government, embassy, local authorities, like that, or the buyer is a non-resident who does not have a permanent establishment in India. So if the person is a non-resident, in that case, the TCS doesn't apply. Are we clear? Now again, the circular has been issued in respect of TCS. Let us look into this. Whether the threshold of 10 lakhs for TCS, does it apply separately for education, separately for medical, or you have to look at the aggregate? So that is the question. So it is clarified by the CBDT that the 10 lakh threshold for LRS, it is separate for the overseas tour package and the LRS. But if it is for the LRS, under that, it is a combined threshold for all the remittances. So if the 10 lakh remittance under LRS is made, let's say for medical, and then subsequently you make a 20 lakh remittance for education, then it is a combined threshold of 10 lakh. So for first 10 lakh remittance, there will not be any TCS. It can be for any purpose. However, beyond 10 lakh, if you make it, if it is the education sponsored through loan, there will be no TCS. Because for education sponsored through loan, there is no limit. But if it is for education or medical treatment, it is 5%. If it is for other purpose, it will be 20%. Then the second question is whether the threshold of 10 lakh applies separately for each remittance. Because let's say if I first remit through ICAI Bank, next time I remit through HDFC Bank. So how will HDFC Bank will come to know about my earlier remittance? So they have said that this threshold is for you, not for the banks. So the LRS limit gets updated when you send the money under LRS. You have to fill a A2 form, declaration. So the bank will enter that in the system and that gets notified by RBI to all the other bank. Right? So the bank will come to know. You don't need to worry for that. So in that particular case, the limit of 10 lakh is for you and not for each banker. Then the third question is there is threshold of 10 lakh for remittance under LRS for TCS to become applicable. While there is threshold of 10 lakh for purchase of overseas tour program. So whether they apply independently or again it's a combined threshold. So as I said, for TCS, for LRS, there is a 10 lakh threshold. For overseas tour package program, there's a 10 lakh threshold. So both are operating independently. But under LRS, there's a combined threshold for any purpose that you remit for. Except if it is for the education sponsored through the loan. Next is a resident individual spends 3 lakh for the purchase of overseas tour package program for a foreign tour operator and remits the money which is classified under LRS. And there is no other remittance under the LRS or purchase of overseas tour program during the financial year whether TCS is applicable. Now, when you make the payment, let's say booking.com, you make the payment through the LRS only because booking.com is not an Indian company. So whether you consider under the overseas tour package or whether you consider it under the LRS because the TCS rates are different. So, if you talk about for the overseas tour package program, below 10 lakh also there is already a TCS. It is not that it is exempt. There is no TCS. Whereas if you go for LRS till 10 lakh, there is no TCS. So here what CBDT has clarified is the TCS provision for the purchase of overseas tour program package will apply and not the TCS for LRS. So in this case, even if you remit the money under LRS for purchase of overseas tour program package, the authorized dealer will be required to collect the TCS at 5%. And it will not be the case that the threshold of 10 lakh will be applicable and there will not be any TCS under LRS. Are we clear? Yes or no?
मैम ओवरसीज टूर्स पैकेज अलग थ्रेशोल्ड अलग है और एलआरएस अलग है मतलब एलआरएस का थ्रेशोल्ड सब मिला के एक होगा और ओवरसीज टूर्स पैकेज का थ्रेशोल्ड अलग है राइट मैम
करेक्ट यस
इंडिविजुअली वो दोनों इंडिविजुअली देखेंगे विद इन एलआरएस वी विल कंबाइन एवरीथिंग
करेक्ट
ओके
सो फॉर इफ यू सी फॉर ओवरसीज टूर पैकेज 10 लाख तक 5% है बट फॉर रेमिटेंसेस अंडर LRS 10 लाख तक कोई TCS नहीं है. No TCS up to 10 lakh. No TCS up to 10 lakh. But for overseas tour program package, it is 5% up to 10 lakhs. So, the question was that if I have purchased the overseas tour program package and I made the remittance under LRS, whether there will be no TCS because the payment is less than 10 lakh or I will be charged 5% for the overseas tour package. CBDT has clarified that since you have purchased overseas tour program package, the threshold of LRS will not be applicable and 5% will be collected for the overseas tour program package. Are we clear?
Yes, ma'am.
Next is there are different rates for remittance under LRS for medical treatment or education and for other purpose. What is the scope of remittance under LRS for medical treatment or education? So, what do we mean by medical treatment or education? So, medical treatment shall include remittance for the medical expenses, day-to-day expenses required for such purpose, remittance for the purchase of the air tickets of the person to be treated medically overseas, as well as a person who will be attending him. So that will be considered under medical treatment. So all the medical services, healthcare services, payment for that, food, accommodation for that person, local transport transactions, all of that will be covered over there. Plus the air ticket for that person as well as for any attendant. Are we clear? And for the education, what will it cover? Education will cover any tuition fees, any fees paid to the educational institution, day-to-day expenses, the food over there, accommodation over there, local transport over there, health services over there. And again, for the purchase of the ticket of the person who is going to undertake the study, not for the person who is going to stay with that person who is taking the study. For medical, of course, you have to, have somebody else with you. But for education, it will only cover the air ticket of the person who is going for study. It will also cover the payment for the education even if the person does not go overseas and take a correspondence course. Let's say, for example, there is diploma in international tax. This can be done from India. You don't need to travel there. And if I make the payment for that tuition fees, will it be covered here? The answer is yes. It will be covered here. Okay. Next is whether the purchase of international travel ticket or hotel accommodation on standalone basis is purchase of overseas tour program package. So as I said, that only purchase of flight ticket or hotel accommodation is not the overseas tour program package. Tour program package will be what? Which will include everything. Flights, the local stay, the sightseeing expenditure. It's like a package that you buy. Like if, for example, if I show you what is the difference. So let's say if you go to makemytrip.com. If you, let's say for example, I select Mumbai to, let's say Australia, whatever. Okay, Sydney. Now, this is not overseas tour program package. Let's say if I select any hotel also, this is not overseas tour program package. This holiday package which is there, which is covering, let's say I'm going to Europe, which is covering your everything. If you look at this kind of package which is there, let's say this Paris group tour, it covers the round trip flights, it covers the hotel, it covers the activity, visa assistance and the meal. Or even if it doesn't cover the flight, but it's a combined package. So this is what is covered under the overseas tour program. Are we clear? Fine.
Yes, ma'am.
Any questions? Now, just like TDS, you have 206AA, which requires you to charge a higher TDS if no PAN is furnished. Same in TCS, you have to charge a higher rate for non-furnishers of PAN. So it requires you to collect the higher TCS, which is twice the rate specified in the Act, or 5%. It will be 1% in case of 206C1H. What is 206C1H?
Sale of goods.
Sale of goods, yes. So in that case, it will be 1%. Other than that, it is 5%. But the sale of good is no more applicable from this year onwards. So they have not yet deleted this point over here, 1%. But this is not anymore applicable. This 206C1H was applicable earlier. So if you look at this 206CC, let us see if there's a correction in module or in the Act itself. Yeah, it just says at the rate of 5%. So here I think there's a correction which has not been made in the module, which says twice the rate specified in the Act or at the rate of 5%, because 206C1H has been deleted after 1st April 2025. And what they say is that the rate of TCS cannot exceed 20%. The maximum cap is 20%. Okay, any question, any doubt? Again, even if the PAN is invalid, incorrect, it will be deemed that the PAN has not been furnished. But this will not apply to a non-resident who does not have a PE in India. Fine? Yes, any questions, any doubt?
Clear, ma'am.
Okay. Now again, just like TDS, you have to pay the TCS also within the prescribed time. What is the TCS? Time limit, if it is the office of the government, then within 7 days from the end of the month. If it is other than the office of government, within again 7 days from the last day of the month in which the collection is made, just like your TDS. Then you have to also furnish the return of TCS, which is called a statement of TCS, which is in form 27EQ. Again, it is quarterly, so 30th June by 15th of July. The TDS return is what is the due date for TDS return?
31st July.
31st July. It is
October,
31st. Correct? And for the month of March?
31st May.
Yeah. So here it is 15 days prior. It's 15th of every month. For the month of March, it's 15th May. Are we clear?
Yes, ma'am.
Yes.
Clear.
Okay. Now, again, failure to furnish the statement would attract the penalty of rupees 500 for every day during which the default continues. Again, you can correct the statement of TCS, but again, the time limit for the correction has been introduced, which is 6 years from the end of the financial year in which the original statement has been filed. Again, what are the penalties for the non-payment of the TCS? For example, we had the penalty for failure to deduct the tax at source. We also have a penalty for failure to collect the tax at source. So what does it say? If any person fails to collect the tax, then such person shall be liable by way of penalty, a sum equal to the amount of tax which such person failed to collect. And this shall be imposed by the assessing officer. Are we clear? Okay. So just like we had the penalty, again, if there is a reasonable cause shown, then the penalty may not be levied. If there is a reasonable cause shown, then the penalty may not be levied. Again, if you fail to submit the TCS returns, then there is penalty under 271H, or if you fail to, if you furnishes the incorrect information, which may be penalty may be 10,000 to rupees 1 lakh. However, no penalty shall be levied if you have deposited the tax before the expiry of 1 month from the date of when the statements have been delivered. Okay. Plus, in this particular case, if you fail to furnish the TCS statement, what did I say? There is also a penalty under 272A. What is that penalty? 500 per day. So, if you fail to furnish the TCS returns or the TDS returns, I told you in TDS also, there is a penalty of 500 per day during which the failure continues. Okay, any questions, any doubt?
Clear, ma'am.
Yes, but the penalty will not exceed the amount of TDS or TCS. Again, the credit for the TCS will be given to the person to whom in whose PAN the tax credit has been deducted. If somebody else wants to claim, if he wants to give the credit to somebody else, he needs to file a declaration for that. Okay, and once you have furnished the return, you have to also furnish a certificate of TCS. Just like you have the certificate of TDS, here you have the certificate of TCS, which has to be given to the buyer within 15 days from the due date for furnishing the TCS statement. Fine. Okay. Now, what are the consequences of failure to collect the excess source? We saw there is a penalty. Also, there is a personal liability to pay tax collectible at source. A person who is responsible for collecting shall be liable to pay to the credit of the central government if he has failed to collect. And he will be deemed to be an assessee in default for failure to collect tax. However, this deeming provision, this assessee in default will not be applicable if the tax is paid by the buyer, licensee or lessee. So, if the buyer or licensee or lessee has furnished the return of income under 139 and has considered this income and has paid the tax, then in that particular case, he will not be treated as assessee in default. Same like, the TDS. And as I said, there will be penalty under 221 also, which we just saw that in the case of the TDS also. There was a penalty under 221. Yes or no? So if you look at this section 221, what was the penalty? When there's tax in default. So if the interest is not paid, there will be a penalty. But if there is a genuine cause shown, the penalty may not be levied. And what is the interest payable? In case there is a failure, interest at the rate of 1% from the date on which tax was collectible to the date on which tax is collected, and 1.5% from the date on which tax was collected till the date it is actually paid. However, in the case of where the buyer has paid the tax, then in that case, what shall be interest time from where the interest will be payable? Interest shall be payable from the date on which tax was collectible to the date of furnishing the return of income. Yes? What will be the interest rate in that case?
1%.
1%. So it is similar provision to TDS itself. So if you have not paid the tax, then if the buyer has paid it, that is not a problem. Any questions, any doubt till now?
Clear, ma'am.
Yes? Anybody, any questions? Okay? Yes or no? Is this understood? Everything that we have discussed so far, is it understood for everyone?
Yes, clear.
Okay, fine. So it is just like all the compliance provision which are there are similar as we have seen in the case of TDS. All the provisions remains the same. What you have to do is you just need to know these provisions, but this is important. These provision based questions are also asked in the examination. Are we clear? Yes. So in this particular case, what are the other provisions which are applicable? There is again the same CBDT circular, waiver of the interest. So same thing. If the TCS has not been collected, the Chief Commissioner or Director General has the power to reduce or waive the interest under Section 206C7. If the payment is initiated by the collector and the amounts are debited from their bank account on or before the due date, and the tax could not be credited to the central government because of some technical problem beyond the control of the taxpayer. So in the case of TDS, when could the interest be waived? What were the reasons for waiving the interest?
Such a seizure of the books of accounts, jurisdiction of the High Court केस रुके थे, वो बाद में सुप्रीम कोर्ट ने रिवर्स किया है, तो
Correct.
और
Mutual
DTL
agreement was it.
म्यूचुअल एग्रीमेंट.
In the case of TCS, these can't be the reason. In TDS, you can have an examination of whether this is a chargeable income, so TDS will be there or not, or you can go to MAT, or because it's a DTL issue, or like the way these books are seized. But here TCS may it's collection of tax on the sale. So that doesn't depend on DTAA or whether the sale is chargeable to income tax or not. That's never a question. It can be the chargeability of income can be in question for contract, for professional service, like that. So here, what are the reasons for waiver? If the payment is initiated by the collector, amounts are also debited from the bank account, but let's say there was some technical glitch. The bank app was not operating. Income tax website was not operating. In those cases, they may waive the interest. They may also waive the interest even if the interest has been already paid. It's not that interest is only outstanding. In those cases, interest can be waived. However, no waiver application shall be entertained beyond 1 year from the end of the financial year in which interest is charged. And they have to dispose of the application within a period of 6 months from the end of the month in which the application is received. So this is same for both TDS as well as TCS. Are we clear?
Yes, ma'am.
So the maximum time limit which has been given is 1 year from the end of the financial year in which the interest has been charged. Now, what is the time limit for treating the tax collector as assessee in default? Again the same. 6 years from the end of the financial year in which tax was collectible, or 2 years from the end of the financial year in which the TCS correction statement is delivered, whichever is greater. So this remains the same. Are we clear? Any question? Fine. Then we have the processing of TDS or TCS statement. That, TDS and TCS statements will be processed by the income tax department. So while processing, they may, issue a notice to you that with respect to these errors, you have to pay more demand. There can be any arithmetical error. Let's say, for example, you have not computed the interest correctly at 1%. So they can, demand the additional interest from you. You have not paid the fees under 234E of 200 per day. Mind that there is 200 per day, which is there under 234E, is for both TDS as well as TCS return. It is for both. So all the penalties and the fees that we have seen is for both TDS as well as TCS return. So if you have not paid that, or there is an incorrect claim, so in this cases, they can, make those demand in the processing of the TDS return. And an intimation will be sent to you. If there is demand, they will send an intimation. If there is some refund due to the deductor or collector, they will be giving the refund. But the intimation shall be passed within 1 year from the end of the financial year in which the statement has been filed. Fine. So this completes your TDS and TCS. Any questions? Fine. Next comes the advance tax. So who is liable to pay advance tax? So if you have the total income if the tax is more than 10,000, you have to pay the tax in the current year itself. So an obligation to pay the advance tax arises in a case where the tax payable is 10,000 or more. And if you have, of course, the income chargeable to tax. So if you have 10,000 or less, you are not required to pay the advance tax. And in case of senior citizen who have interest, rental income, in those cases, if they do not have any business income and they are resident senior citizen of more than 60 years, they are not required to pay any advance tax. Now, how do you compute the advance tax? You estimate your income and pay the tax liability on them. This is based on the estimated income. And the final income you will, determine only when you file your income tax return. So you can consider your last year income tax, last income, and based on that, you can estimate for the current year income. And also note that in case of person who has been assessed by way of regular assessment, the AO, if he is of opinion that such person is liable to pay advance tax, or if the AO otherwise also feel that any person should, pay the advance tax if he has paid in last year and is not paying current year, then he can serve an order requiring the assessee to pay advance tax. And this can be served at any time during the financial year. Are we clear? And when the advance tax which is there will be paid as per the tax rates of the current year, which comes from the Finance Act Part 1. Yes or no? Now, when you pay the advance tax, what you will do? You will deduct the TDS, the credit of TCS which is there. Yes or no? So you will consider the credit of that. Now, in case you have not got the TDS credit. So let's say, for example, the advance tax which is payable is computed by reducing the TDS which may be deductible, but has not yet been deducted. Then whether the payee shall be liable to pay advance tax to that extent. So So what the view is that if the amount of tax deductible at source is there, but the payer has not deducted, then it shall not be reduced from the income tax liability, then you have to pay the advance tax. So only when the tax is actually deducted on your account, then only it can be reduced. It is not that, somebody will deduct and I will not pay my advance tax. That is not the case. Or if somebody has collected, then only it can be reduced. Okay? So what are the installments of advance tax? So it is for other than presumptive businesses. It is on or before 15 June, 15%, 15 September, 45%, 15 December, 75%, and before 15th March, 100%. And even if you pay by 31st March, that will be counted as advance tax. And for the presumptive businesses, there is only one due date, which is 15th March. So before 15th March, you need to pay 100%. And if you do not pay any installment by the due date, you will be treated as assessee in default. And when you file your income tax return, you will get the credit for the advance tax. Now, what are the interest chargeable for the non-payment of the advance tax? What is the interest chargeable? Interest for non-payment or short payment of advance tax is 1% per month or part of the month. If the advance tax is less than 90% of your assessed tax. So what is the period from which it will be charged? From the 1st April of the financial year till the date of determination of total income under 143(1). What is 143(1)? When the return is processed. Are we getting this? And if the assessment is made on you, then up till the date of assessment. So it has to be paid on the assessed tax, which falls short of 90% of the assessed tax. So it will be on the amount which is assessed tax minus advance tax actually paid. What is the assessed tax? Assessed tax means the total income determined either under the processing of the return or at the time of assessment as reduced by any TDS paid, any tax collected, any rebate allowed, any foreign tax credit allowed, any MAT credit allowed, reduced by all of that, not reduced by the self-assessment tax. Are we clear? Okay. And this will not include any tax paid under the updated return. Fine. And in respect of the, where before the processing of the return or before the completion of assessment, the tax is paid as a self-assessment tax, then the interest shall be calculated up till the date you pay the self-assessment tax, as reduced by the interest already charged for the under 234B. And if there is any shortfall, interest shall be calculated from the time when you paid the tax under self-assessment tax till the assessment of the assessed tax. Are we clear? Any questions, any doubt?
मैम सेल्फ असेसमेंट में अगर कम भरे तो वो इंटरेस्ट फ्रॉम सेल्फ असेसमेंट टू असेसमेंट तक ही होगा, नॉट फ्रॉम फर्स्ट अप्रैल.
करेक्ट.
ओके मैम.
बिकॉज सेल्फ असेसमेंट तक आपका पूरा हो चुका है इंटरेस्ट कैलकुलेट.
ओके ओके मैम.
And where the total income is increased on reassessment, then 1% shall be charged on the total income as computed under reassessment, but it shall be on the total income computed in reassessment minus tax already assessed under the normal scrutiny or under the processing of return, and it will be from the 1st April till the date of reassessment. Okay. Then there is interest for deferment of advance tax under 234C, which says that in case of an assessee other than the presumptive assessees, who is liable to pay advance tax and has failed to pay advance tax on time, then there will be 1% interest per month on the shortfall. So 1% for 3 months if it is not paid by 15th June. Again, similarly for 15th March, it will be 1%. 1 month, sorry. However, if the advance tax paid before 15th June is not 15%, but it is 12%. Or by 15th September, it is not 45%, but 36%. Then we will not charge the interest. And in case of a person who pays by presumptive, then it will be 1% on the shortfall for 1 month. And 234C will not be applicable in case the estimate of the income was on the basis of capital gain, winning from lotteries or crossword puzzle, PGBP, where the income arises for the first time, and the dividend income, because you can't estimate these incomes. But you should pay the amount on these income by the 31st of March. And when the shortfall is calculated, so at that time it will be reduced by TDS, any foreign tax credit, any MAT credit. Fine. Okay. Then there is another interest which we have to deal with is 234A. What is 234A? Interest for default in furnishing the return of income. So if the return of income is not furnished, either under 139(1), belated return, updated return, or when a notice is issued to you to furnish the return and you have not furnished or furnished after due date, then you'll be liable to interest at the rate of 1% or part of the month, which commences on the day immediately following the due date and up till the time where the return is furnished after the due date, or when no return has been furnished up to the date of completion of assessment. The interest under 234A shall be reduced by the interest, if any, already paid under the SE tax. And what will be the amount on which interest is payable? The tax determined minus any advance tax, TDS, TCS, foreign tax credit, MAT credit. This will not include any additional income tax paid under the updated return. Are we clear? So this is if the income tax return is not filed, and where the return is furnished after the notice issued for reassessment, then in that particular case 1% will be charged from the where the return is furnished after the time of the notice till the time you furnish the return, and where no return is furnished up till the date of completion of assessment. And it will be charged on the tax assessed in the reassessment. However, interest will not be charged on the self-assessment tax paid before the due date of filing of return of income. So if you have filed a return late, but you have paid the self-assessment tax, then no interest under 234A shall be charged if you have completely paid all your taxes. Clear? Then we have interest on refund granted. So if a refund is issued to you by the income tax department, they will also pay you the interest, which is 0.5% on the amount of refund for every month or part of the month from the date of grant of the refund to the date of regular assessment. Then we have seen this fees or penalty for TDS, TCS statement. Now, if for any reason you're not paying the taxes, then how can the recovery of tax be made? So, first, a notice of demand will be issued under 156. By issuing you a notice that within 30 days of the notice, you are required to pay the demand. And you can, request the AO to extend the time if, you're not able to pay. And AO may, with the approval of the Joint Commissioner, may extend that time if he has reason to believe that it will not be detrimental to revenue, that another 30 days are allowed to you. Now, if the notice is issued and you did not pay even within that time limit, which is given in the notice, then you will be liable to again pay the interest 1% for every month or part of the month from the date up till which you had to pay in the notice and ending with the day when you actually pay. So that is under section number 220. And if you do not pay the interest, if you do not pay the amount, you will have to pay the interest at the rate of 1%. Are we clear? Any question, any doubt? Yes? Yes or no? Any questions, any doubt?
No, ma'am.
Fine.
Fine.
Then again, you can request for the reduction or waiver of the interest by the Chief Commissioner, Principal Chief Commissioner, or Principal Commissioner or Commissioner. So if the amount is up to 50 lakh, you have to make an application to the Principal Commissioner or Chief Commissioner. If amount is 50 lakh to 1.5 crore, it is Chief Commissioner, and if it is above 1.5 crore, it is Principal Chief Commissioner of Income Tax. Okay. Then the power of reduction will be there exercised if they are satisfied that payment would cause hardship to the assessee, the default was made beyond the control of the assessee, and if the assessee has cooperated in all the inquiry. And the order shall be passed within 12 months from the end of the month in which the application is received. And if the interest is already charged under for the TDS and TCS, no interest under 220 will again be charged. So actually, if you generate an intimation of the TDS statement, processing of TDS statement, that is deemed to be a notice of demand under 156. Now, if you do not pay the TDS demand under the intimation of TDS, will the interest under 220 will be applicable? The answer is no, because we have a specific interest for non-payment of TDS and TCS under 2011A and 206C7. So in those cases, again, 220 will not be charged. Where interest is chargeable under 206C7, then or under 2011. Plus, if you default in payment of any tax, we discussed we have a penalty under 221. And even if you pay the tax before the penalty, it will not absolve you from the penalty. And the order imposing penalty is appealable, subject to the condition that you must first pay the tax or penalty before filing the appeal. Now, even if you do not pay by any of these means, even if you have been charged interest, then the tax recovery officer will step in to recover the arrears of the tax from the assessee in default. So what is the method of recovery of the arrears? First is attachment and sale of the movable property. Then attachment and sale of the immovable property. Then, even if it is not done, then you can arrest and detain the person. So, property will include not only your property, but in the name of spouse, minor child, son's wife, son's minor child. If the property was transferred to them for inadequate consideration. So, you may get a hint that, okay, they may, seize your property to recover the demand. So, you may transfer the property to them for inadequate consideration. So, any immobile, movable property transferred to them, even if they have become now major, these minors have become major, still this will be continue under attachment. And the TRO will basically sell these property. Are we clear?
Yes, ma'am.
Yes. Now the TRO has to draw a certificate that this is what the recoverable amount is. And the assessee cannot dispute the correctness of that. But yes, the TRO can grant the time for payment of tax. Until that time, he can stay the proceedings. What are the other modes of recovery? If the certificate has already been drawn by the TRO, then the TRO will only recover. If not, then AO can do that. Now, if let's say for example, the recovery which is there cannot be made, and you have, let's say for example, you have a property in relation to which a notice has been issued, then nobody else can claim in regard to that property. Like nobody else can, say that, okay, I was going to purchase this. The other modes in which recovery can be made is also issuing the garnishee order to your debtors from whom you were supposed to get the money. Are we getting that? So the AO or TRO can also issue the notice to your debtors to pay them the money instead of paying to you. That is called as garnishee order. However, if you make a statement or note that no money is due by you to them, then they cannot recover. Or if there is some money in the custody of a court, they can order the court to give you the money. Like, there is some property matter going on, some amount is deposited in the court. So they can, order the court to also give you the money. Okay? Any questions, any doubt? Now, in case, let's say, for example, you have properties outside India. Now, we have the DTAA. So, under the DTAA, the government of the foreign country has agreed to help the Indian government to recover the taxes. Or even if foreign government is there, if they are not able to recover from their assessee, who is a resident of India, they can ask the Indian government to help them recover the taxes. So they can prepare a certificate and send to CBDT for the recovery of any tax due from a resident of India or having a person having a property in India. And the TRO then can proceed to recover the amount and give it to the CBDT, who will give it to the foreign government. Fine? Yes?
Yes, ma'am.
Any questions, any doubt, whatever we have done so far?
All these provisions are of only TDS and TCS, recovery, penalties, and everything is of only TDS and TCS.
No. This recovery of tax is for all kind of taxes.
All income tax and everything will be here, and that penalties and is only for TDS, TCS.
Yes.
Means how to bifurcate this? And it is getting mixed up of all this.
See, what we have done till TCS was only applicable for TDS, TCS. Then we started with the advanced tax. Then we started with the recovery of tax, which covers all the taxes. So, basically, we first started with the TDS and TCS. Till that, whatever penalties I have discussed, you will again see those in the penalty class. But I've just linked it here so that while you're studying, while you have to write and answer an exam, you should know that, okay, these are the provisions which are penalties applicable to TDS and TCS. Because in exam, a question can be asked, what if the TDS is not paid or TCS is not paid? What are the consequences? But then after that, after the advanced tax, the chapter goes generally to discuss about the other factors. So there is no linkage between these and the TDS, TCS that we have done.
Okay, ma'am.
Okay. Now, for example, we are discussing here about the tax clearance certificate. This doesn't have any linkage with the other. So we are just going in a flow with which the module is mentioning after the TDS, TCS. Okay. Right. Now, this is a tax clearance certificate which is given, in lot of cases when, let's say, for example, a ship leaves the India, or when a person who is not domiciled in India but who is visiting India in connection with business, profession, or employment. So here they have talked about a person who is not domiciled but is in the exercise of business, profession, on employment and has derived the income of India. He shall not be able to leave India unless he furnishes the tax clearance certificate. Tax clearance certificate, which means what? That he has offered the income to tax here. He has paid all the due taxes. His employer has deducted the tax if he has not paid it directly. And then only he can leave India. But this shall not apply to any person who is not domiciled in India but just visits as a foreign tourist or not carrying out any business, profession or employment. So this is just to ensure that whatever due taxes are have been paid here before he leaves, so that it shouldn't happen then the government is not able to collect the taxes from him. This is also applicable to the shipping companies who are foreign ships who are coming to India and are just going to leave the Indian port. So before they leave the port, they have to pay the taxes. So this is an exception to the concept of the income of the previous year is charged or assessed to tax in the next assessment year. Do you recollect? In the basic class, we had seen that. Yes, income of the previous year is charged or assessed to tax in the next assessment year. The exception are NR engaged in shipping business. Person leaving India. So if a person is leaving India and he was doing the business, profession or employment, he should pay the tax in the year in which he has earned it. Are we clear?
Section 175.
Correct. 174. Okay.
Yes.
And he is required to obtain a PAN also. He is required to furnish the PAN also and has to give this certificate. Unless he gives this certificate, unless he pays the tax, he will not be able to leave. Same is in the case of ship or aircraft. So this is called the tax clearance certificate. Fine. Then we have refunds. So if there is a refund due, you will be given the refund. And as I said, what is the interest on the refund due?
0.5%.
0.5%. Right? So from the period, what is the period? From the date you have filed your return till the date you got granted the refund. So you can claim refund in what way? Only by filing the income tax return. Similarly, you can be given the refund for the TDS under 195. TDS under 195 is for the non-resident. Under that also you can apply for refund if you feel that you have paid the tax but you are not required to pay the tax. Or where an appeal you have won, then you can request the AO by making an application to give you the refund. Okay. What is the interest? 0.5% from where the refund is out of TCS or by way of advance tax. Then where the return is filed from the 1st April of the assessment year till the date of grant of refund. Or where the return is filed after the due date from the date of filing of return till the date of grant of refund. Where the refund is out of self-assessment tax from the date of furnishing the income tax return or payment of tax, whichever is earlier, till the date of grant of refund. And in any other case, from the date of payment till the date of grant of refund. However, no interest shall be payable if the refund amount is less than 10% of the tax determined in the regular assessment or processing of return. So if at the time of processing of return, there is additional refund which is given to you, and if it is less than 10% of the tax determined, then no interest will be given. Where a refund arises out of the appeal orders, then also the assessee shall be entitled to an additional interest over and above 0.5%. An additional interest of 3% per annum will be given for the period beginning from the date following the date of expiry of time allowed under 153 to the date on which the refund has been granted. So time allowed for giving the refund. Are we clear? So this is the interest which is payable on the refund. Now, where the delay in granting the refund is attributable to the assessee or the tax deductor. Let's say, for example, they have not furnished the correct bank account. Their PAN is not validated in the bank account. Then, in those cases, that period shall be excluded. Are we clear? Yes, any question? Yes, any doubt?
Clear, ma'am.
No doubt till now? Then payment of interest on refund on excess TDS deposited under 195 also, as I said, the interest shall be given. Then the refunds can be adjusted against the tax payable. If there is any outstanding tax demand, where the refund is due, the AO, CIT, PCIT, CCIT or PCCIT, they may, instead of giving you the refund, may set off against the outstanding tax demand or withhold the refund, but they can only do that by giving you an intimation in writing, or where the assessments are ongoing. Then they may withhold the refund up to 60 days from the date on which assessment is made. Okay? Fine. Any questions, any doubt? Fine. So with this, we complete the chapter on TDS and TCS, recovery, refunds, all of that. Penal consequences we have already seen. Now there are some case laws that are remaining that I will just cover it up. The last 5 minutes which are left. Yeah. Is tax required to be deducted under 195 on the demurrage charges paid to a foreign shipping company which is governed by 172 for the purpose of levy and recovery of tax? What is demurrage charge? We have seen that in the PGBP class. What is demurrage charge? Any idea? No idea? So if you do not clear the goods from the ship, then additional charges are levied by the ship, which is called as demurrage charge. Now, if a ship is assessed under 172, if a ship is assessed under 172, right? 172 is what? Any idea? That is the taxability of the foreign ship, right? Tax of the previous year is charged or assessed to tax in the same year. Just now we discussed, isn't it? 172. Yes, this is a special provision which is given to assess the tax in the same year. It's a complete code. Without paying the tax under this section, the ship cannot leave. So if the tax is charged under 172, again is TDS required under 195. So if the tax is charged and collected already under 172, there will not be any obligation under 195 to deduct the TDS on the payment of demurrage charges. Fine. Next is interest under 2011A attracted even in a case where non-deduction of tax at source was under a bona fide belief that tax was not deductible and the default is not willful? So where there was a genuine reason for me to not deduct it, because I thought that this is not taxable income. So whether 2011A still will get attracted on failure to deduct the tax. So the court in this case had ordered that yes, even if it is due to bona fide belief, the interest will still be chargeable. Yes, the penalty may not be charged for bona fide reason. Interest will still get charged. Fine. The next case is payment made to an overseas agent who did not perform any service in India liable for TDS. So if an event management company was there who engaged the services of an agent in India. Sorry, if the event management company engaged the services of agent outside India and they made a commission. They paid a commission to him. And they did not deduct the TDS under 195 because he was a non-resident agent. Now, the services were rendered outside India. The income did not arise in India itself. He only contacted the artists and negotiated with them. Therefore, there was no TDS liable because there was no income chargeable to tax in India because no income accrue or arose in India. Fine. The next case is the deductee entitled to claim the credit for TDS if the amount of TDS is not reflected in Form 26AS because the deductor has not deposited it with the government? So if the credit is not reflecting in your 26AS, then under 143(1), when the return will get processed, their CPC will not allow you. And even his application was rejected for rectification because it was not reflecting in Form 26AS. So the High Court here held that deduction of tax is one of the method of collecting the tax. And this tax deducted as per 198 is part of the assessee's income and it is included in his income. Now, if the payer did not deduct the tax or pay the tax, you cannot collect it from the assessee as per section 205, right? So any amount which is not deposited by the payer, right? This payee has already included in his income. And if the credit is not given, the department would end up recovering from the payee. So once he has paid to the payer and once he will pay to the department. So High Court held that the credit will not be restricted in case the deductor failed to deposit. So deductee should be given the TDS credit and no recovery towards TDS can be made from the deductee. The recovery proceedings should be initiated against the deductor. Are we clear? Yes or no?
मैम तो उसको टीडीएस वापस मिलेगा उसका
Yes.
गवर्नमेंट से भरा नहीं है तो भी मिलेगा गवर्नमेंट देगी उसको
भरा नहीं है तो भी मिलेगा. So that's what they are saying, that the recovery proceedings should be initiated against the deductor to collect the tax from him because he has been taking and sitting on that amount. Okay. Next is, can the provisions of 206AA apply in case there is a DTAA which prescribes a lower rate? So treaty may have a lower rate, but 206AA says that you can have a higher rate of 20%. So can Act override the treaty? So here the High Court noted that section 90, you will learn that in international tax class, it provides that the provision of the treaty will override the Act in case they are beneficial to the Act. And section 4 and section 5. Section 4 says what? Total income of the person. Total income means what? Total income as per you decided under section 5. As per the total amount of income referred to in section 5. Computed in the manner laid down in this Act. So section 4 and section 5 says that the income will be determined as per the provisions of the Act, and section 90 says that the treaty provisions will override the Act to the extent they are beneficial. Therefore, 206AA cannot be said to override the charging section itself, which itself says total income has to be computed as per the provision of the Act. So it held that in case of the DTAA existing, 20% will not be invoked under 206AA because treaty will override the Act. And this has been upheld by the Supreme Court. Okay. Next decision is, can items of the finished products from a ship breaking activity which are usable as such to be treated as a scrap will attract the provision of TCS. So assessee was engaged in the business of ship breaking activity. It sold used plates, old wood, etc. and did not collect the TCS on the sale of these items. And these were finished products. So whether they are scrap, so the scrap must be from mechanical or manufacturing working, which is not usable as such after breaking. And these items from the ship were usable, so they are not scrap. That's what has been held by the Gujarat High Court. Next decision is pendency of dispute resolution under MAP a valid ground for waiver of interest? So we saw that interest can be waived if the application is submitted under MAP and it has been accepted under MAP. And you have also accepted the decision. But if the dispute is pending under MAP, the decision has not yet come. So in that case, what need to be done? So the Supreme Court here has observed that just because the dispute has been raised before the MAP authorities, it cannot be a ground for waiver of interest. Only when the dispute is decided, accepted, then only it will be a waiver ground. Are we clear? Yes or no? Any questions, any doubt? In case it's a genuine hardship, yes, they may waive the amount of interest. So here, in this case, the assessee was a part of global conglomerate, which had incurred this much amount of sales and operating profit. And whether there was any genuine hardship, that needs to be seen. But just because you raised a dispute on the MAP, that cannot be ground. If the MAP proceedings are pending, it has to be concluded. The last case, which is very important, of Singapore Airlines Supreme Court judgment, was in respect of whether the additional income earned by the travel agent over and above the minimum fare fixed by the airline be also subjected to TDS under 194H beside the standard commission on the base fare. Now what happens? Understand this. In case of air tickets, the base fare for air tickets is decided by International Air Transport Association ITA. Base fare. Given the discretion to sell the tickets for a fare lower than the base fare, but it cannot go higher because otherwise what will happen? The airlines can charge exorbitant rates. So base fare doesn't mean the minimum fare, it is the maximum fare. You can go below the base fare. Right? Now the prices are decided by airline, approved by the DGCA. Now the ITA gives the blank tickets to the travel agent on behalf of the airline. Let's say Make My Trip. Look, if you see Make My Trip. Let's say, for example, if I go to Make My Trip. Let's say I'm checking the flight for Mumbai to Ahmedabad. Let's say 26 December. And let's say I'm also going on GoIB. Now this is showing 4194. Now let's say I also go here and I check the same flight, Mumbai to Ahmedabad, on the same date, which is 26th of December. Okay. So now, if you see here, this is also 4194, but it will give me additional discounts also. It may be different also. So basically what they are trying to say is that the ITA gives the blank tickets to travel agents to market and sell the travel tickets. And there is an arrangement existing between the airlines and the travel agents, which is governed by a passenger service sales agency agreement, which sets out the conditions between the travel agents and the airline. Now, once these tickets are sold, a fixed percentage of commission, which has been designated by ITA, would be paid to a travel agent as a standard commission, which is based on a maximum fare set by ITA, base fare. Plus, they can also earn the commission by way of the difference in the price accepted by the airline and the price they actually charge to the customer. Now, of course, the standard commission is subject to TDS under 194H. Now, what the travel agent will do is, at the end of the month, at the end of the billing cycle, they would give the amounts of the tickets sold to the airline. Right? And another billing and settlement plan. Now, airlines actually have no control over the actual fare that Make My Trip or GoIBibo are charging. So let's say airline says the price should be 5,000. But they may charge it 6,000 because the maximum fare is, let's say, 7,000. So additional amount that travel agents charge over and above the net fare that has been accepted by the airline would be retained as their commission income, which is a supplementary commission. Now, airlines have not deducted the TDS on this supplementary commission and they have been treated as assessee in default. So whether 194H applies on both the base commission as well as supplementary commission. So here the court analyzed that 194H is to be read with 182 of Contract Act, which provides that the relationship between the airline and the agent is that of principal and agent. And the tickets that have been sold by the travel agent is the property of the airline. There is no transfer of title in the tickets. And therefore, they are acting as an agent on behalf of airline. And they are also working in context of the agreement that they have signed, which is a PSA agreement with the airline. So there is no principal to principal contract. It is not like the case of, stamp vendors and, where they are purchasing and selling on their own account, or the SIM card dealers. So this supplementary commission is also part of the principal agent relationship. So the fares that the agent also collects is collected on behalf of airline and they will be giving back to airline after the payment cycle. So what they have said is here that in this case 194H will also be applicable on the commission, which is a supplementary commission. However, as regards the penalty, because there was a genuine and bona fide, legal clarity not being there, that will not be applicable. As regards the interest under 2011A, they would be liable for that. Are we clear? So this is an example which is given that this is a base fare, this is the net fare which is set, and this is the actual fare. So I think the amounts have gone over here. So on the supplementary commission, they have said that the TDS will also be applicable. Are we clear? Fine. So this completes your entire chapter. And also I think lectures till now, at least for the month of November from my side. I would request you to please study. I would upload all these notes so that you can revise also. Thank you so much. And if you have any questions, I'll be happy to take it up.
Can these case laws be applied on real basis? I mean, can these be applied?
Yes, these can be, of course, applied.
Okay.
Right?
Yes,
Fine.
ma'am. In case of DTAA, whether DTAA means applicable or not, or Act will applicable in last to last case laws.
DTAA, to the extent it is more beneficial, that will apply over the Act.
Okay.
Any other question? Okay. So I think we can close the session. Thank you so much.
Thank you, ma'am.
Thank you. Yes.